LivingSocial may raise more than $200 million in a round of private funding that could value the company at over $6 billion. The news comes just weeks after Groupon's IPO and days after Yelp filed to go public. Our next guest has been following the daily deals market closely. With over 12 years of experience as an equity analyst, he now focuses on late-stage private companies as a senior research analyst with Greencrest Capital. AB Mendez joins us now from New York. And AB, first of all, I've got to ask you, Groupon shares tanked today, down more than 9%. What's the real story behind that?
Hi, Emily. Thanks for having me on again. Well, Groupon, a lot of people weren't watching their screens maybe in the last half hour of trading this past Friday, but part of the story of today's trading is what happened then. Somebody was buying it pretty aggressively. Most of that might have been ETFs or indices, but regardless, it was somebody buying it, pretty strong. It drove it up almost 6% by the close on Friday. So really, 24 has been a key resistance level over the last week and a half for Groupon. It kind of migrated towards that on the open today with the market seeing all this turmoil, and then finished a little bit below, but still well above the $20 IPO price.
What about LivingSocial? We're hearing they're going to raise money rather than go the route of IPO, though Groupon seemed to have primed the pump. Why do you think LivingSocial is making this decision?
Well, I think it's a strategic time for any of the companies in this space to raising capital and having a sufficient cash cushion as they look to build out additional geographies, as well as aggressively trying to gain a meaningful advantage in the location-aware deal space, which will be key, especially as Google pushes into the space and Facebook stays involved with the check-in deals also. So I think they're just going to, any of these firms will raise as much capital as cheaply as possible right now. For LivingSocial, maybe it's private, not public, because my guess is that they haven't reached the scale in terms of overall operations that Groupon has reached to allow them, about a third the size of Groupon's subscriber base. I don't think they have the meaningful positive cash flows that Groupon is starting to generate, so it's a little bit tougher to sell that IPO right now.
How much do you think LivingSocial is riding the wave of Groupon? I mean, could LivingSocial really raise this kind of cash at this valuation if it wasn't for Groupon?
Groupon certainly set the bar pretty high in terms of valuation, per user or per amount of cash flow in this space. They both sit at a really exciting space that I'd say, the intersection between social media and social commerce, between online advertising and e-commerce, because to the retail customer, it's an e-commerce site in that you go and swipe a credit card. You're actually paying money when you buy one of these discount vouchers. But to the local business, it's a very inexpensive form of online marketing. So instead of spending a couple thousand for TV, radio, print ads, you spend zero up front and pay in the form of that discount. And the market put a pretty high value on Groupon for that reason, and that certainly helps LivingSocial's valuation.
Yelp is another business that does do daily deals, though not solely daily deals. How optimistic are you about Yelp's future? This is a company that's bringing in $58 million in revenue for the first 9 months of this year, a much smaller company, but looking at potentially a multi-billion-dollar valuation.
Yelp is really fascinating, as you and I have discussed in the past. I think it's interesting, for one, just because it's like Twitter in that it's a market-leading app, a really interesting social media company that millions and millions of users are in love with, but it really hasn't started to ramp the monetization yet. So yeah, Yelp will be very interesting from that standpoint. But it was interesting from the daily deal standpoint that Yelp, as well as Facebook, pulled back, and most recently in the third quarter, OpenTable announced that it's closing down Spotlight, its local restaurant deal equivalent. So I think Yelp, looking at the S1, the other category, which made up 9% in the first 9 months of 2011, was the fastest growing category of revenue for Yelp in the first 9 months. And the fact that they're pulling back from local deals, and the fact that that was the biggest part of other, that's another just interesting twist in the Yelp story.
So do you think how the market views Yelp could sort of give us an idea of how the market might view Twitter, even though they are very different companies?
I think so, because in the same way that Zynga kind of gives you a little window into how investors are going to look at Facebook, considering that Zynga is a multi-billion-dollar company built almost entirely on the Facebook platform, Facebook still being private, Twitter still being private, not having announced anything about IPO plans or timing. Zynga is similar in that it's gotten a niche in social media that it is dominating. There's nothing close to it. I mean, Zagat is the closest comp, and they sold for less than $500 million to Google. Yelp really is a market leader in a high value space. The question is, can they expand that outside of restaurants to other merchandise categories and also international growth? Twitter is a global property, so if Yelp can convert on that, then it'll help the valuation a lot. But I think Yelp is comparable in that it's a great social media tool with broad adoption, but very early in terms of monetization.
Interesting. Well, we will be waiting for Yelp to come out of the gate and watching for Zynga as well in a matter of weeks. A.B. Mendez from Greencrest Capital, thanks for joining us
Thanks
today.
very much.